please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
In today's chart, stock is seeing some selling in the last few minutes, so not looking too good. Let's see whether or not there can be some defense, and there is a fight that's put in from the bulls. But on that note, let's get in some market opinion. Pankaj Tibrewal, Senior VP and Equity Fund Manager of Kotak Mutual Fund, says that macro headwinds that the markets are facing, that in fact is a tug-of-war between macro concerns as well as micro improvements. Let's hear out what he had to tell us earlier today.
There is a tug-of-war going between the macro concerns and the micro improvement. And clearly at the moment, macro concerns are taking an upper hand. Clearly, if you look at our view over the next 6 to 8 months, we believe markets are likely to be volatile, led by the macro headwinds and the election, which probably would start somewhere from November, December on the state side and going up to the general election in 2019. At the best, markets could consolidate at these levels, and henceforth we believe that there is a merit to be cautious on overall markets. We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies. Opportunities have started to emerge on a bottom-up basis selectively, and we believe that over the next 6-8 months, if we build a great portfolio of good quality companies at the right price, I think over the next 2-3 years it could reap benefits for most of the investors. We are a regulated entity and we respect any verdict by the regulator. However, we believe that if you look at from an overall growth perspective, this industry has a lot of leg from a growth perspective. Today we are about 13% of GDP to AUM. Globally, if you look at it, it's about 60-65%. So we have a long way to cover out there. But any verdict by the regulator is most welcome, and we would take all steps to comply with it in the respectable time period. It would depend on how each of the AMCs take it forward from there, how much they absorb, how much they pass it on to the distribution. It would be really the strategy of each and every individual AMC.
All right, on that note, let's invite our technical experts, Ashwini Gujral and Sandeep Wagle, join in with fresh technical ideas. Good afternoon, gentlemen, to both of you. Ashwini, let me come to you first. In the last half hour odd, we've seen a nick come through. The Nifty is below that 11,300 mark. Mid-cap index down about 100 points now. What happens to the intraday trade on the index and also on the Nifty Bank?
Yeah, macros became soft for hardly 3 hours, and now the rupee is beginning to fall again. Brent is beginning to rise again, and my sense is that we are not going to get a very substantial pullback from this, 11,280, etc. And chances are, the chances are very bright that today itself you could get to 11,250. So people should give up their long positions which were taken in the hope of any sort of fancy pullback. And in fact, this is a good time to even get short, because you still have about 3.5 hours, probably 4 hours for the market to close, and that is enough time for all kinds of mayhem to happen. Because given today's scenario, near support, support from macros, etc., we should have gone up. That we are not able to hold even a 40-50 point pullback just shows the intensity of the selling, and my sense is this intensity is going to increase the moment rupee, etc., they fall a bit further. Having said that, Reliance Infra is a sell with a stop of 413, target of 395. Adani Ports is a sell with a stop of 381, target of 365. And Coal India is a buy with a stop of 276, target of 290.
All right, Ashwini, thanks so much for that. I'm getting a little worried looking actually at the advanced decline ratio, because now the number of stocks that are declining, it's gone to around 1,150. When we started off the show, it was around 1,000. Earlier today, it was less than 800. So the number of declining stocks, they're clearly going up, and they're far overpowering the number of stocks that are advancing. So keep an eye out on that, Mark. But Sandeep, let's get you in this conversation as well. Trade on the Nifty and as well as the Nifty Bank. That's going to be quite a beast actually today. What's the trade on both those two indices? As well as you'll have some trading picks for us.
Afternoon, Nigel. Trade in the Nifty would be a shorting opportunity, not more than 20 points. I don't see a bounce trend more than 20 points. So any move to 20, 30 points, I would be a seller. Bank Nifty, that would be 50, 70 points. And I would look at a 200 point down move in the Bank Nifty. At least 80 to 100 point down move from those 20 points in the Nifty. And I see a path in the second session of the day. I would sell a KPIT, stop loss of 298, target of 287. And in case one wants to play for a bounce back, the stock that is showing strength is a Muthoot Finance, stop loss of 465, target of 483.
Get in some market opinion. Earlier this morning, we caught up with Sunil Garg, the head of international equity research at JP Morgan, from the sidelines of the India Investors Summit, which is underway in Delhi, to talk about the performance of emerging markets as well as the outlook for the Indian market. And Sunil actually mentioned a very important point, that they have cut the target now for the MSCI Emerging Market Index. Hear him out.
We've lowered our estimates in terms of target price for MSCI Emerging Market Index and also some of the EPS numbers. But the fact remains that emerging markets are very cheap, and in fact they're trading at a much wider discount to historical averages, and that at least provides a value floor in emerging markets. So overall we are positive. I think the big driver here, it's going to be China, because China has been a massive underperformer. So it's not just some of the Latin American currencies that have been weak, but it's China's equity market that has been dragging down EM performance. We've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. If you look at some of the high frequency data points coming through, whether it's PMI, whether it's rainfall, whether it's the pressures from oil prices, I think these are going to be acting as headwinds, and we think the consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%. We actually think that higher bond yields are a sign of confidence, and typically, historically, and particularly in developed markets, they've been associated with better equity markets rather than the other way around. Overall, emerging market positioning at the moment is light, and I think India is, as I again mentioned earlier, has been one of the stronger outperformers. So there's clearly a possibility that as investors get more comfortable with emerging markets, it rotates into markets that have massively underperformed.
Well, the rupee had recovered earlier this morning from near 73 levels that we saw yesterday. Let's hear out what Jahangir Aziz of JP Morgan had to say on the rupee trajectory and what he expects from the Reserve Bank of India in its October policy.
There are much simpler solutions to these problems. There is much simpler explanation to where we are, why we are. But if we do not want to go with these simpler solutions and simpler explanations, instead we want to get tangled in the weeds with exports, imports, oil prices, we are going to come up with these kinds of very tangled solutions and tangled views. There is a very simple thing, and there is very little controversy about it. There are two reasons as to why the rupee is under pressure, like any other current account deficit. The current account deficit is rising, and global financial conditions have actually tightened through April till July. In August was very different. Then in August, emerging market risk was being reassessed. If you made up your mind, I don't know whether RBI has made up his mind or not, but suppose they have decided that they are going to hike in October 5th or 6th, whenever the policy date is, There is much better to do that rate hike now, in fact last week, in fact the week before that, than delay it till October. The effectiveness of that rate hike goes away, diminishes the longer that is delayed. And I don't see these artificial things about policy review October 5th, therefore I can't hike before October. Those are just, artificial restrictions. So if you're, I'm not so much worried about how many rate hikes as I'm worried about how quickly the rate hikes come in. Because the more you delay it, the larger the rate hikes always end up being.
As we speak, there's a bit of a recovery. The Nifty is, continuing to hold on to the 11,300 mark. So it seems the bulls, at least as of now, they're putting in a bit of a fight. The most important strike that we have been telling you is 11,300 put. Just take a look at that. It's added nearly around 6.5 lakh shares in terms of open interest. The premium out there is around 70 rupees. So if you're writing that particular strike, your stop loss comes in at around 11,230 odd. So the bulls, they'll put in a fight for around 11,200 to around 11,250. But on the upside, the 11,400 call, that as well is fairly active. The premium out there is around 60 rupees approximately. So the 11,400 call, if that can come up for you, that's added nearly around 4.5 lakh shares. So if we get up and going, then 11,450 will be the level that the bears, they'll believe that they can go ahead and defend that mark as well. So keep an eye out on both those two pillars on the Nifty. But moving on then, Northern Arc Capital, formerly called IFMR Capital, which provides access for debt under ranked businesses, is looking to raise nearly around 600 crore rupees in a pre-IPO round. Bids are likely to be open today, and CNBC Tv18's Priya Seth joins us, and she's going to give us all those exclusive details. Priya, what will the funds be used for, and when is the IPO planned?
Well, absolutely. Debt platform Northern Arc Capital is looking to raise about 600 crore rupees through the private equity route. Now, this is a pre-IPO fundraise is what we do understand. And at this point in time, we do understand that there are about 8 to 10 private equity investors who are interested as far as bidding for this is concerned. Now, this fundraise, we understand part of the funds will be used for the company to support business as well as growth. And the remaining will be used to dilute some shares. Do remember that existing investors, including Standard Chartered Private Equity, Fidelity International, as well as Leapfrog, hold about 55% in the company. So they would perhaps look at diluting some part of their stake as a part of this pre-IPO round. But the IPO, do remember, is expected in financial year 20, and April to May 2019 is when we can expect the company going ahead with the IPO. But of course, the valuation as well as the stake dilution details will be discussed after the funding is completed. But of course, all eyes on the bidding, and the bids will be open today. In fact, we did reach out to the company, and the company is yet to respond to our query.
All right, thanks very much for that, Priya. The other big story that we're tracking is that Kumar Mangalam Birla's retail company, Aditya Birla Retail, is likely to announce a deal with Amazon-backed Samara Capital soon. My colleague Nisha is here with those details. Nisha, over to you.
Thanks for that, Sumaira. Of course, it's going to be a large transaction, and the most important bit to note here is that Amazon is trying to play out its omni-channel approach in India in a big way. And this deal is going to be a big example of that. So after investments in Shoppers Stop earlier this year, Amazon is going to back Samara Capital, and they are likely to buy out more stores, which is part of Aditya Birla Retail Limited, which is a closely held company, and the deal size could be around 4,200 odd crore rupees for supermarket and hypermarket kind of a brand chain, which has close to about 600 stores pan-India. So that's an important transaction here. A few more details on that. As per the FDI guidelines, Amazon will not be in a controlling stake, and Samara Capital could be holding 51% and above in this large transaction. Even Pranab Barua, who heads more at this point in India, is the one who is likely to take over the operations for the new buyers as well, and switch over to the new buyers as part of the deal is what we gather. So those are a few important details to note. It's going to help Aditya Birla Group in two ways. First, of course, it's a loss-making entity more, so stop loss there. And on the other hand, 4,000 crore rupees of debt on the books of this company will be wiped off with this large transaction. So Amazon looking big on India. Foreign inflows in the retail sector in India is really coming in.
Okay, all right, Nisha, thanks so much for that. Well, as the government is mulling import curbs, Sanjeev Sanyal, the principal economic advisor, cautions against the adverse impact of such measures on economic growth and stressed on the need for export swaps as well. In a conversation with Lata Venkatesh, he also talks about the weakening rupee. Let's listen in to what he had to tell us.
We will look at, including, if necessary, tariffs and other steps are being considered. But as I said, it will be done with a medium term in view. For the immediate concerns, the main thing remains that the Reserve Bank, which has more than adequate reserves, will continue to use its reserves to manage volatility. And I think a point that I made earlier and many times is that people get too excited about the bilateral exchange rate between the rupee and the dollar. The fact of the matter is the rupee, if you take a 5-year perspective of the exchange rates, has been broadly stable against virtually every exchange rate other than the dollar. So there was no particular reason for us to have heroically stood out while all our competitors and trading partners had depreciated. So an adjustment did happen. But let me also say that, as things stand, the rupee at current exchange rate and with government bonds at a little over 8%, I would argue that these Indian government securities are very, very attractive by global standards as a asset. So, do not think that this is a one-way street.
How many $1 billion is the government targeting to save by imposing duties on imports?
No, I don't think that is how you do it, because the danger in that is that in order to hit some sort of a target like this, you will force fit all kinds of barriers, tariff or non-tariff, and will end up eventually hurting the economy in some fashion. So you have to be very, very careful when doing these things, not the least because many of these items are inputs into things that are, our own industry and our competitiveness, number one. Number two, there are also WTO and other agreements, trade agreements on which we have signed up. So we have to be very careful that we do not sort of abrogate these international commitments. So given all of these things have to be done very, very carefully.
Well, what about export growth in that case? Should we expect some packages for some sectors?
Certainly, export promotion remains something we are keen on. But as I said, while packages can be put in place, they do take a little bit of time for response. So as far as the current exchange rate issue is concerned, that will continue to be driven both partly by international developments and partly by views on the stability of the Indian economy, which I think is in good nick.
Crude oil prices that had dipped to around 78.7 odd. As we speak, it's moved to around 79.2. So just keep an eye out on that mark. And in fact, the markets are looking at that very, very closely, because if it moves to around 80 odd, then we should see some selling in terms of the equity markets. Manisha Gupta joins us. Well, Manisha, crude prices, not great commentary coming in from an India point of view late last afternoon, evening. But how's it looking now?
In the 70s, so that tells you that it's only maturing on the higher side, and not too far away from 80 is how the Brent is trading. Well, yes, you have very strong bullish commentary that has been coming in from the international markets, whether it is from OPEC, where they say that they're comfortable with 80 and they would continue to cut output, and then of course it is the Iran sanctions. So between these two fundamentals is what we've seen prices taking cues from. But as promised, Ranisha Chanani now joins us with her strategies there. Ranisha, hi, a truncated week for India, not for the global markets, and we might be looking at a lot of action in next 24 hours. But ahead of the Sunday OPEC and allies meeting, what are you anticipating and how would you want to trade?
Manisha, I think 5,100 at MCX crude oil and $80 for Brent crude oil and $70 for WTI crude oil. These are the strong resistance level that we are facing. And I think, this market is waiting for a trigger like yesterday when we saw that Russian airplanes was downed by Syria, and that triggered some buying in crude oil. And I think, again, today's inventory data could be a next trigger that would take the prices above this resistance level. So I'm expecting as prices trade above this level for MCX like 5100, if it is crossed and prices sustaining above it, it can very well go above for 5200, and even in international markets we can see 2 to 3% rally. As you said, we have a combination of two things. One is OPEC and Saudi Arabia is comfortable with $80, and secondly that we have seen that continuously Iran sanction news is giving a positive trigger to the prices. So I think overall trend is up, buy on dips or above 5100.
Coming on the metal space as well, Renisha, because this has been a good sector today. We have seen buying on all dips on even as the US-China trade war concerns have been escalating. We've seen retaliation on one. Are you buying any of these? Would you say that much of what's happening with these two countries have been factored in now?
Yes, Manisha, I think that everything is almost factored in, at least the 10% tariff which is imposed by US to China, and 10% again tick-for-tack move by China to $60 billion of US goods. At least this is factored in the prices, and we have seen until something next comes, prices are in good fundamental shape, and technically also they have been consolidating in range from past 2-3 months, and finally yesterday we have seen that a breakout has come and a rounding bottom formation has been seen in technically formation. So I think after this long 2-3 months of range trading, prices are finally breaking out. So I think at least 2-3 days we'll see good buying coming in. So I'd be also advising buy on dips for copper, zinc, lead, nickel. All metals seem to be heading higher. So buy on dips should be the strategy used at least for 2-3 days. We'll see 3 to 4% rally from current prices.
3 to 4% of gains in metal prices in this week. Renisha, one quick word on the precious metal space also, because while the US Fed rate hike in the next week is almost done, would you say that is something that these commodities also have factored in? With the view coming in from the global markets that the US dollar from here on is not going to run, at best would stabilize around these levels, does that give you confidence enough to go out and buy these metals?
Yes, Manisha, as we are seeing that dollar index is comfortable around 94 and 95. It's a strict, resistance that it is facing. And in precious metal pack, gold is building a base around $1,200 and silver is building a base around $14. So after, a much of consolidation, I think prices would, break its resistance like 1,215 for gold and something around 14.50 for silver. If prices sustain above this level, I think we'll again head higher. By the end of the year, we'll definitely see good and better prices than current seeing. So everybody's expecting that only. So even my expectation is you can buy on dips or on this breakouts. For intraday also, I'm recommending buy 30,800 is a good level to buy for gold for the targets of 31,000. Even silver can target 37,800. So buying the strategy that could be used for entire commodity space today.
Okay, all right. Thanks so much, Renisha and Manisha, for joining in and filling us in with what's going on in the commodity space. We'll wrap up on halftime report.